Hello, hello, hello. All right, guys, so this is going to be a very short live. I wanted to make a video, but then you have to edit it and then do all these things. So I'm just going to shoot this raw. So my apologies if it's really bad, but I don't think it is. It's going to be really good. There's a lot of data I'm going to show you. No one's really talking about this. It's because to get access to this data, you have to obviously pay. This data is from a former hedge fund, and I'm going to show you guys some really cool and neat things right now, okay? So a lot's going on in the market right now. Today we were down on a lot of stocks. However, Clover Health has definitely seen some stabilization, and there are a couple things that we want to talk about. So with Clover Health, if you guys haven't realized, margin is back online for Clover, right? And I speculate that we should be seeing some more inflows in the stock. Those gamblers, let's call it, right? I think margin is terrible. No one should use it unless you have the means to pay it off in a bank account, And so yeah, margin's back online, and let's get started with this video. All right, so let's just first off talk about what's going on with the market right now, okay? So you got inflation fears, you got war happening in Ukraine, there was issues with fighter jets. Ukraine wanted a no-fly zone, which obviously when you put a no-fly zone, you unfortunately, well, first off, before I even start, first off, do you guys hear me? Can someone comment in the chat if you guys hear me? So please let me know. So I'm not wasting people's time when I'm talking here. So I want to make sure people can hear me. So I'm going to continue, and hopefully I see your guys' comments here, okay? So what's happening right now is Ukraine requested a no-fly zone, right? And what they ended up getting was, you guys can hear me? Perfect. Okay. So Ukraine requested a no-fly zone, and unfortunately, that was not granted. Now, I say unfortunately, actually, it's fortunately, right? Because if they were granted a no-fly zone, we would be in World War III right now. Because what does a no-fly zone mean? It means that NATO shoots, or the United States shoots down a Russian aircraft. That incites World War III. So United States essentially, basically, how you doing, Josh? How you doing, Luis? God bless you guys. Thank you for joining. So when I can hear you. Beautiful, beautiful. Thank you. So, United States told Poland to give the fighter jets because, the Ukrainians said, well, if you're not going to help us do a no-fly zone, at least you can give us some jets, right? So Poland was like, great, we would love to give you jets, but you know what? We're so close to Russia. We'll have the United States give you jets. United States said, no, this is going to cause World War III. So we're just going to go ahead and Poland, you give them the jets, right? And they went back and forth, and nothing happened. Ukraine's not getting the jets. And there was a video I posted back with John McCain, and Lindsey Graham and Amy Klobuchar, the senators there. And, they were essentially beating the drums of war and have been for quite some time. So we have essentially looked really, I guess, weak in Putin's eyes, but Putin knows World War III is not going to happen over Ukraine. So now Ukraine has been a big problem in terms of the human cost and in terms of the geopolitical cost, especially with gas, right? However, I am going to show you guys some data that will prove this bearish investment thesis otherwise. Now, again, can the stock market go down more? Oh, of course it can. There's just a lot that the stock market's dealing with right now. This is a lot of stuff. But we have data from the past that might show us things that, maybe someone who, let's say, started in the market who wouldn't know otherwise. So first off, the S&P 500 today was down negative 1.30%. The Dow's down negative 0.69%. And the NASDAQ was down negative 2.18%, with the Russell down at negative 1.59%. Now, if you look at SoFi stock, I made a video a while back ago about SoFi, and I got a lot of hate. Like, how could you think this is a $9 stock, $10 stock from the bear ratio that I gave it, the bear case scenario, which obviously was calculated with no emotion in our intrinsic value calculation here. So obviously it's you know, it is what it is. It is what it is. The stock is down 9.14%, more, let's say, down than all these other futures here. Palantir is down 4%, right? Jumia is down 8.81%, and Tesla is down 5.12%. But look at this, guys. Look at this. Clover Health, the bright, desktop here. You can already, Google knows, right? It's only down less than 1%. Okay. And if you look at here, guys, it essentially was less, if you can, less down than the Russell 2000. So that tells me now is that maybe Clover maybe it hit a bottom. Who knows? I mean, we know that there is more buying than selling for Clover, at least from the smart money perspective, which we already talked about. I showed you the institutional buying. I showed you where is big money going in, and it's very clear they're not selling out of Clover and they're buying more. Okay. And in fact, the conviction was strengthened when Chelsea Clinton purchased, right? So Clover's my only stock that isn't getting hammered. Exactly, right? Exactly. A lot of stocks are getting hammered. And we just talked about all these things here. SoFi. Now, some of you may not have heard of Jumia. Now, Jumia was the type of stock that went up all the way up to like 60, higher than 62 in terms of the intraday movement. I think it was like 67, 68 from, I actually sold it around that region, right? And it was a really good stock. It started off strong, but then got hit hard by Citron Research, and then it recovered. And then Citron Research said, no, they're not a scam. And then they went up, and then now it's back down. But Jumia, though, is an African e-commerce. They, are called the Africa of Amazon. And they were competing with a stock called Ozone, which is the Russian of Amazon. But what's dangerous is actually it got delisted, or I guess partially or fully removed from the exchange. So people that unfortunately purchased it now, it actually went down, and a lot of sanctions have got hit hard, right? So exactly, the Amazon of Africa, right? That's what they call Jumia, right? But here's the issue that we have. So I am a president of a nonprofit in the La Mesa division in Arizona, and we distribute millions of pounds of fresh produce to lower socioeconomic sectors. Yes, I do a lot, right? I don't sleep, right? Gas prices have increased, so it required us to unfortunately increase the cost of our produce that we deliver, right? There's a lot of issues right now with gas, and the EU is on their knees right now in terms of gas prices. Why am I talking about the EU when we have Jumia up here? Well, think about this. First off, Jumia is losing, right? Their balance sheet is not that great. I expect more from them. They're not doing as what they're saying. And I don't think profitability is going to hit until 2025, 2026, right? And I looked at the numbers a week ago, 2 weeks ago. In fact, I planned a video just for Jumia, but I wanted to mention it here. Don't you think with all the gas prices increasing, don't you think jet fuel is also going to increase as well? That's going to, unfortunately, cost a burden on the operational expenses for Jumia, on top of the already rising inflation cost, on top of the so essentially the African people that are in the continent, they're going to say, well, this is more expensive now. I don't want this, right? And it's going to unfortunately hurt the stock in the short term. Now, again, it could pose some buying opportunity because I think they have enough cash for about a year, right? Until they have to do a share offering, okay? So that's the kind of this analysis in regards to Jumia, right? Now, let's take a look at Tesla, right? So I want to just go in here. So this is our private Discord channel. It has over $22,000 of yearly subscription of artificial intelligence technology resources that will make your head spin, right? And it's only for $9.99, under $10. But I wanted to just really show you real here. I'm going to take this command here, and I'm just going to, let's take a look at Tesla, right? So this is the algo flow. And what we want to look at here is we're starting to see that the stock price movement's going down as well as the algo score. Now, for all those algo traders out there, this is exactly what they use. Now, if you don't know how to read this, what this is telling me is that the algo flow traders are actually thinking that, this Tesla stock could have more room to go down bearish. Now, again, from the long-term perspective, guys, my price target on Tesla is $1,600, okay? And I have that in our price target section of all the stocks that I've analyzed here, okay? But in terms of the short term, option traders are saying, you know what? This might go down more. So, and if we try to zoom out, and by the way, if you want access to this by itself, this is like $150 a month, and it's included within the package. And I try to be fair and try to give you guys a lot of information to have access to this. But check this out. If we put 5 days for Tesla, what we get, and you see the feedback, how quick it is. We look at a longer time frame here, and we see that, you know what, Tesla might go down more. There might be some bearish sentiment for Tesla, and it might go down even more. And then we want to take a look at, let's say SoFi, right? Let's take a look at SoFi here, right? And you can see that's just a clear demarcation if it's going down. Now, let's go ahead and take a look at Clover, right? And you can do any stock you want, right? Any limited, you could be stay up here all night. And this is exactly what you want to see. The stock price going down and the algo score green going up. This is exactly what you want to see. This is beautiful, right? And it's indicative by it not being down as much, right? It's been doing good because it's got beaten down a lot in the beginning. You see, a lot of these small cap stocks, guys, they go down first, but I'll tell you, they go up first, right? And I was telling, a lot of the people that I know, they're like, oh, I'm going with Apple, Microsoft, they're doing good right now. Well, then that's the problem. When you buy when times are good, or when the stock's going up, you're already too late. I made a video about ExxonMobil in November, and I said, listen, this is a buy at 45, whatever it was, right? Now it's, 90, 80, right? Well, it's too late. People buying now. I'm like, dude, you lost your chance, right? So this is exactly what's happening right now. And I'm going to show you guys some data, and we're going to get onto this right now. So first, let me go ahead and take some time and read your guys' comments so I can, have some interaction here. And I want to make this not too long of a live so people can watch it, right? Because there's going to be other people that watch it. I want to make sure we respect their time as well. So yes, the Africa of Amazon, Jumia is, but I don't think so right now. It's not looking too good for them, but maybe they can improve. I was highly invested in them before. Sorry, I'm reading the comments here. It does not address. Exactly. So the deliveries have been extremely challenging for them, and and it's a tough market to crack, right? Well, yes. So Clover Health was shorted, right? And we talked about this all the time, right? They like to short the stock to oblivion, and then they just recreate the narrative and then rebuy back in, right? And then push the stock back up. Again, it wasn't institutions that have sold, right? Maybe the minor ones that essentially did tax loss harvesting in November and December. But honestly, guys, it was the retail investors that sold. In fact, I have a figure I showed you guys in one of the videos in the past in terms of how much retail sold. And I did the calculation. They sold $1 billion worth of stock for $144 million. I mean, come on, right? They lost a lot of money. In terms of options, I'm not too sure. I have to look at the artificial intelligence in terms of if you're looking at call and puts. But overall, the algo score is very positive, and I'm going to show you guys some bullish things that I don't think no one's talking about this. So what I'm about to show you right now, unfortunately, because again, this requires multiple years of experience to ascertain this data. No one looks at the statistical analysis, and no one does these things, right? And I'm going to show you, okay? But first, let me give me a moment. Un momento. So let's see here. They are adding. I was thinking Clover would drop again, but. Yeah, so dollar cost averaging is going to be your best bet. Now, I don't know, I'm hoping it goes down. I mean, guys, I'm praying it goes down. I hope it goes down to $2 again. I mean, come on, right? I really want it to go down more. And honestly, I feel like there's going to be a huge rebound now because if you guys didn't hear in the beginning, they they went ahead and activated margin. So margin is reactivating in Clover Health, which essentially means that now a lot of people are going to start gambling again with their money. And that's going to increase buying pressure as well, right? So I'm going to go ahead and drop this link here for anyone who's interested in our Patreon for easy navigation as we go ahead and proceed on with the data here. So let's go ahead and let's focus on this guy. I'm going to minimize myself here so we can see. No, you guys can't see the data here. Let me see. Okay, let's go ahead and see the data. So what is your price prediction for Clover at the end of the year? So in terms of the end of the year, it's extremely difficult to predict that, but I have some data I'm going to show you. And then I want you, if I don't get to that question, Skywalker, I need you to go ahead and I need you to use the force and re-comment again and remind me if I don't get to it, because that's an important question. And I have data to possibly answer that. Okay, so here's this. I'm going to show you guys this graph here. This is smart money / dumb money, right? Unfortunately, smart money is equivalent to institutional investors, venture capitalists, and dumb money, unfortunately, is retail investors. You know, that's just how it works, right? So as you can see here, the smart money to dumb money ratio is that the higher the value is here, the higher smart money is buying versus dumb money. And this is indicative if we just move more so here really quickly, we can see that the smart money in blue is actually buying and the dumb money in red is selling. And in fact, we did see some buying pressure, which, you know, we got that small rally, and then now it's starting to go on the downturn, hence why SoFi, Jumia, Tesla, it's all been going down because retail is getting scared. And the VIX, which measures the volatility index, hasn't gone up to a position of extreme max fear. And I'm hoping it does, because maybe it might go into and bleed into Clover Health. In terms of coronavirus, I think the economy and the stock market has moved away from fears of COVID, right? So let's go back to this one here, just to explain to you guys what the whole smart money and dumb money confidence spread ratio is. Now I want you to look at these red dots. These are signals that we isolated and essentially analyzed and back tested by going back until 2000. And again, we can go back all the way to 1928. Right? But these are the data sets that we found. And we have certain criteria where if, for example, a particular movement in price and a sentiment in terms of multiple different types of analyses hit a specific point, it triggers a signal. And we got these 13 to 14 signals that signify that we might be in a reversal, which is like insane. Like, what in the world? A reversal? Right? So let's just go in and analyze this by looking at the statistical model associated with this in terms of the 1 week, 2 weeks, 1 month, 2 months, 3 months, 3 months, 6 months, and 1 year projections from the historical from 2001 all the way up to 2020. You get an average win rate of 92% from 2 months later. What that tells me is that 2 months from now, we might be at a 92% positive win rate that brings you from the S&P 500 brings you an average return of 8.92%. Now, we obviously know if the S&P 500 goes up that much, usually the lower stocks go up higher, right? But if you go ahead and analyze the 2 month returns, you can see that the win rate is extremely positive. There's a 92% win rate, guys, and you can see there's only one time here where it didn't go through and you lost money. But again, this is a signal that shows you that we just are experiencing this now. Now, please tell me if this does not make sense, because this is an extreme data point here, and this is what hedge funds look at. This is what Kathy Woods looks at, right? So just give me a comment down below if you understand this, and then I can move on. So in terms of risky seed here, in terms of dark pool, excuse me there, in terms of dark, I got a little too excited, huh? So in terms of dark pool, so that data describes what again? All right, let me go back. Okay, so All right. So in layman's terms, if you look at there's a specific signals that we look at, and this specific signal, when the 20 period moving average crosses over a specific indicator, when smart money / dumb money is essentially ratioed to a point where smart money is buying more than dumb money, it shows you that institutions are buying while retailers are selling. It shows us that this has happened. This jump has happened only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times. And from this historical position, we've seen it, and as you can see, it happened right down there. Literally, it predicted the bottom right there. And also in 20, this was not, especially right here as well. And from this prediction, it shows you 2 months later, there was an average return of 8.92% with a win rate of 92%. And these are basically the projections from these specific dates where essentially the signal has been implemented. Okay? So this is to answer this question here. I hope that makes sense, right? So in layman's terms, if you just want to dilute that, it means that in 2 months, we might be in the green. In 2 months, the stock market may recover. Now, again, these are just historical data points. We've never experienced inflation during these times, right? In the 70s, right? This inflation is huge, right? And we also have a war going on with Ukraine. So there's a lot of issues at play here. So the best thing to say is usually a year from now to 2 years, and we have data for that as well, I found, but I'm not going to overwhelm you with data. A year from now, we found that stocks might actually go for the positive, might actually go green. And you know what's interesting for all the Clover Health community fans out there, Clover Health stated that they're going to become profitable in 2023, literally setting up for an explosive event, especially with all of this data that we're cycling in. Okay? So I hope that makes sense. That makes so much sense. Beautiful, beautiful, beautiful. Okay, good, good. And this is the type of data we like to provide for our members. You know, we want to make sure that you guys, again, this is for retail investors to get a fair shake on Wall Street. Well, this is what Wall Street has, and then this data is coming from hedge funds, right? So I want to make sure you guys understand that. Okay, so let's go ahead and look at our AI. Someone talked about dark pool, so let's go ahead and go to our dark pool area here, and let's take a look at the symbols here. Okay, let's go to dark pool. And let's just take a symbol here. And let's take a look at Clover's. Someone's talked about Clover Health with dark pool. So in terms of Clover Health, people have been purchasing in the dark pool anywhere between $2.49, $2.54, and $2.70 at a share range of 1.33 million, 1.2, and the max here 1.87 million. And again, you guys have access to this. This is extremely, you know, to have access to dark pool, it's pretty good, right? And another thing I want you guys to take a look at for all the Clover Health fans is let's go ahead and take a look at another command here, and let's look at our stock research, but more specifically, let's take a look at our social media analysis here. Let's take a look at what's happening in Wall Street Bets. Let's go to WSB here, and let's see what Wall Street Bets has to say. So as you can see, and again, you guys have access to this for $9.99, under $10 a month, unlimited. Okay, cancel anytime, right? And this is just a surface of what we offer. So this is the Wall Street Bets chatter, and what you can see down here is Clover Health is coming back alive. Clover Health, right? People are talking. They're seeing. SoFi is down 9%. Palantir is down 4%. Jumia is down 9%, right? Tesla's down. But Clover Health is not. And people are talking about it. Okay? Or again, the price calculator. Okay, good. So in terms of and by the way, Jordan, I don't understand this VOR red. What is that? I'm so sorry. Excuse my ignorance. So we're again the price calculator on the disk. So the intrinsic value calculator is actually in our Mastering Stock Market course. Our Mastering, which is, let me show you here. So this is our mastering stock market course right here. And the intrinsic value calculator is right here. And this is how you guys are able to calculate the intrinsic value of the stock. This calculator is highly accurate, extremely. And you calculate it and it graphs it for you. So this is in our mastering, and it includes lifetime access, one-time payment. Now, in terms of the price targets, though, if you want to look at all the companies that I've analyzed, these are essentially the outputs. Now, someone talked about Clover. What is your price target at the end of the year? We'll get to that. But essentially, this is what we have for, again, this is just skimming the surface. We offer short squeeze, heat map. There's so much what we offer. There's just so much to go over. But these are all the price targets to answer your question. I appreciate that, Dan, man. I really do. God bless you for your service. Thank you so much. I appreciate that. Yeah, we try to give you guys the best information at a laughable price. I mean, this is just laughable. And we're going to continue improving, right? So going back here, so let me see if I answered all the questions. Hey, how you doing, Mopar? God bless you. How you doing? So make sure you look at the stuff from before, so we can you can catch up and understand what's happening. So, all right. So now let's talk about those signals I told you about. So this has a 92% win rate, and it shows you that in 2 months we're going to be bullish, right? If you would have invested the dollar within the first day from the month of the 42 days after from smart money and dumb money spreads for the first of the month, just a dollar, you can see. Look at that. Look at that increase, right? Look at that increase from December 2000 all the way up to November 2021. Look at that, right? We have the data. Patterns don't have to repeat themselves, but we have them to basically ascertain the market. It's another tool under our sleeve, okay? Now let's go ahead and take a look at something that you guys are going to love. So who in here knows XLK? XLK. Who in here knows that? Because I'm not going to go on and explain this if I don't explain it. I mean, what kind of teacher would I be, right? XLK. So for people that don't know, XLK tracks the technology sector. In fact, you might want to invest if you like this one, right? Personal opinion here. But this tracks all of the technology stocks. Here, let me go ahead and zoom out. Okay? This tracks all the tech stocks, right? So the beautiful part is here, it's also been going down, right? Because tech has been going down, right? No idea. No, it's okay, Lucas. Sorry, not Lucas. Luis. I have a cousin. Sorry, not cousin. I have a nephew whose name is Lucas. So, I've been invested in Sun W for a long time. So Sun W is another one on my watch list. I believe I put on my watch list, but if it's not, it's on my other watch list here. I need to, but I think I put it in there. I believe green energy is going to. Let me up the answer to the question here. I do believe green energy is going to have inflow now with all the rising gas prices, all these things. This is going to cause a lot of influx in green technology. And it looks like from the Biden administration, they would rather squeeze Americans on the gas pump than essentially force them to turn green rather than help them out a little bit with the gas right now. I honestly think we just need to start pumping here. But yes, I do think we're going to see some inflows. Okay. Going back to the XLK, this tracks all the technology stocks, okay? Now look at this. This is interesting. We back tested, again, from 2011 to 2022, all of the corporate insiders, the insiders of all the technology stocks. We went ahead and we searched all of the technology CEOs, the insiders, every one of those people that are inside those stocks, right? Those technology stocks, and we tracked them. And what did we see? There has been enormous insider buying. And from the data sets that we have, the win rate is 88%, 90%, 96%, and 100% a year later with a 20% return. Okay. Now that may not seem like a lot, 20%, right? Again, we're talking all of the technology stocks, all of them, right? And we can include Clover Health in there as well, and Palantir. Let me answer the questions here, Al. How many minutes do you rest in between sets, JK? Honestly, I need to do more. Have you done you responding to? I have not looked into that particular analyst. I don't know if he carries any weight. If you can, comment down below the link, so I'll be able to review it. That'll be very helpful. And yeah, I'll make a response, and I'll break that argument down and see if it has any merit. And if it does, well, we got to talk about it, right? But as you can see here, it basically shows you. It basically shows you here that corporate insiders of the technology stocks are increasing. They're increasing their ownership of the tech sector of the stocks that they own. Chelsea Clinton, right? What does that tell you? They know something. Of course, they might. Peter Schiff, one of the greatest investors. I've read hundreds of books, right? I read hundreds of books, right? One of them said that you don't know why someone sells. It could be a death in the family. It could be they need to pay something off, but without a reasonable doubt, you know exactly why someone would buy a stock, right? So let's take a look at corporate insider buys in general, not just tech stocks, in general, normal stocks, the whole shenanigans. And would you look at that? Insider buying has been decreasing. Look at insider buying, guys. They bought here. They bought the insiders of all the stocks they bought during this dip, and they stopped, and they're not buying anymore. The insiders are not buying of all the stocks, but for some reason, the tech stocks, they're buying. That means the tech sector knows something is about to happen. They know something, right? There's a lot of, obviously, it's very simple what they know. Let me. I have data for that. Let me explain. Let me bring that up here. Okay. Here's the data. This is what they know, right? Energy has been going up, and the technology sector has been going down. Technology and financials are at the lowest, right? While energy is at the highest. Of course, you want to buy in technology. You buy low, sell high, right? Not the opposite. So that is essentially, in dummy terms, explaining what this graph is trying to show you. Okay. Always say that they are middle class, but yeah, they make exactly right. It's if she's buying, you can just kind of simplify, turn off the video. It's a win and good night, right? I agree, right? I always like to go further and try to explain also the data behind this. So again, because a lot of our students are here as well from our Mastering Stock Market course and our Patreon group for under $10 a month, which I cap it at that because I really want retail to get a fair shake on Wall Street, because this information, they don't teach you this in school, right? And I have 4 degrees. My 5th degree will be an MD. Okay, so now let's go ahead and let's look at smart money and dumb money. We already talked about this. Smart money is buying, dumb money is selling, right? And smart money institutions, and we already know what happened to the institutional investors in Clover. They've been doubling down, okay? Even UBS, I think, also, right? So now let's talk about this geopolitical events in terms of wars that have happened. Okay, the Boston Marathon bombing, all these unfortunate things that's happened. The biggest one was the COVID, right? Another disaster was the Iraq invasion of Kuwait, right? Because the U.S. got involved, right? When they went into Basra and south of Iraq, where they hit and defended Kuwait from Saddam Hussein. Then, if you Cuban Missile Crisis. North Korea invades South Korea back in 1950, right? negative 12. There's always issues, man, I swear, right? Then you have the Pearl Harbor attack. The point that I'm trying to share with you guys is that overall, the bottom, usually 22 days. The recovery, 49 days. 49 days. Almost sounds like 2 months, right? Even if it does take longer, right? It's going to end up recovering. And this offers a time to essentially buy the dips on selected stocks, right? And funny how that the average recovery is around 50-ish days. And we see here that there's a positive run rate in 2 months, 60 days, right? So it's interesting. So yes. Well, absolutely, exactly. And PayPal has been gotten hit. It's gotten hit hard. In fact, here let's take a look at PayPal really quickly. Let's take some time here and I'm curious what's up with PayPal here. Yeah, 2%, not too bad, but still, come on, 2%. Look at this. It's gone down. Let's take a look at the algo flow for PayPal here. Let's take a look. What do option traders think? And we also have AI technology. Oh, yeah, it's starting to head down here. So, yeah, so there was a little slight increase and it started going down. So, we also, for the day traders out there, these signals that we get, it essentially shows you the TA technical analysis. We also, the AI also helps you graph support and resistance. It also gives you a Monte Carlo simulation price projection, which essentially shows you where the stock could go. This is for SoFi. Literally, the artificial intelligent technology predicts where the stock would go. And you add that with all the other data sets that we have. The intrinsic value calculation, the options, dark pool, all of these data, and you get an investment thesis, right? And something that, someone who unfortunately wouldn't have access to this, they wouldn't know. So, yeah, I'm trying to see. Again, we got the support and resistant lines here. Revenue. It also gives you an estimation of revenues here. There's just so much this offers. It's just remarkable. What we've created here. Another thing that's coming soon is my own that I'm actually right now that I'm programming right now, and this is called Brain Machine. This is our own AI system, and oh my Lord, is it so strong? It's going to be good. So that's good. So anywho, that's it right there. That's pretty much what I had planned for you guys. I really wanted to give you guys this data. This is really useful data that unfortunately, not a lot of people are talking. I don't think any people are talking about this right now, this type of data. And people are looking at what's going to happen in 1 month, 1 week, 2 weeks. I'm looking at what happened in the past 100 years and analyzing the stock market from that perspective and extrapolating all the data and going in 2 months to 10 to 20 years in the future. So this is all the data that we do. I've been doing this for a long time. I'm doing this for 10 years. And I'm an academic, so I always like to give you guys the best and not university watered down stuff. This is what the big boys use. So yeah, let's take a look here. Let's take a look at this one here, right? Let's look at the support and resistance levels. So let's take a look at Clover Health real quick here. So what the beautiful part about this is it graphs you the support and resistance, and you can do it for different time zones. So you can see there's a resistance right now at Clover Health at $3 at 3.1, right? And if you can go ahead and extend on to the day, and you can do this for Palantir, Jumia. There's so much. So I'll see you guys on the inside here. It's really beautiful. There's so much you can do, but I'm just going to give you guys for my Clover folks out here. You can see that $3.72 is the resistance line for the day chart here. And it seems that the support will be at 278. And honestly, once we pass that $5.30 mark, even this one here, we're up for a big bounce. Let's go ahead and take a look at the hour here. But yeah, I hope this was helpful. Yeah, I see how it's literally sitting right under this resistance of $3.21. So yeah, so it's looking pretty good, guys. That's pretty much all I have. I'm trying to think if there's anything else that I have. Yeah, I can't think of anything. So, all right. You guys have any questions? I'll wait for a response here. If you guys have any questions, make sure if you guys want to check out what we have, let me show you guys here. If you guys are interested, this is our Patreon group here, and if you're interested for under $10, everything that I showed you is right here if you guys want to read it. And I can just take the link and put it down below here. And I hope this is helpful as much as it's, I mean, I'm using it. You guys can see, I mean, I have, you know, and then this is if you want your own separate room, you don't want to be annoyed, you know, your own separate room. And you also get a private Zoom call with me for your own stock analysis as well. But yeah, this is just under $10 and you get access to all this information. And it's only going to get more and more and more and more. I mean, we're going to continue to keep adding to this. And yeah, as you can see, we're still scrolling here. You got crypto. I mean, you got I didn't even talk about our auto AIs here. There's just so much going on, guys. There's a lot packed in here. You got your own Bloomberg terminal. Okay. All right. So when Lambo, well, watch the video. Watch the video in the beginning and you'll understand. I honestly think the Lambo will be coming soon. So to answer Skywalker's question, I just remembered Mr. Skywalker here. To answer your question, I don't know if you're still watching, right? In our price targets here in our private Discord channel, if you look at our price targets here, right, for Clover Health, I honestly think if we take a look at here, in 1 year, I would say, because inflation is going to become persistent and we haven't seen the thick of things, right? Because of, you know, we just recently banned oil from Russia. I would say, honestly, if I were to, I don't like doing 1 year. I would say by 2025, I would be surprised if we're not at $40, $48, right? But I would say by the end of the year, possibly $4 to $5, possibly $6. There's a lot of good news baked in, or not baked in, about to come in from Clover Health. There's a lot of good news. And honestly, I think we may get a CFO this year, and it's going to be right on track right before they become profitable. So it might be by third quarter or something. So there's a lot of great things to come into Clover. We just got a new CTO. There's a lot going on. A lot of analysts always talk crap about Clover, and you know they got their investments in Humana, and Humana's obviously talked about, and all the other big insurance companies, they talked about how, you know, they are losing market share for Medicare, and Clover's taking care of it. You know, if you look at Lemonade and all the other insurance companies that do different types of insurance, life insurance, you look at their MCR, you know, their medical loss ratio, and it's kind of interesting how, you know, it's actually trending upwards. But for Clover Health is actually trending in the correct direction. It's going downwards. So these are all great things for Clover Health. And it's one of those stocks where, you know, everyone was going into Palantir, you know, people were going, not to throw shade for my Palantirians, right? You know, SoFi, and I was like, guys, no, right? So, but now look at the stocks are going down now, right? They're compressing their evaluations. And Clover's already done that. So that's the analysis for Clover. What is with the, oh, yes, good. So the reason why I said with direct and without direct is Elizabeth Warren, I'll just leave it there. No. So Elizabeth Warren and a couple of other senators that lean a little bit more liberal, they talked about how they would like to end this whole Trump Medicare type of billing And direct contracting was, you know, at the point that we were creating this back in February 28, people were getting scared. Like, oh man, or February before that, right? Oh my God, you know, could Clover Health lose its direct contracting? No, of course not. In fact, CMS just upgraded Clover Health to you know, not upgraded Clover Health, but they upgraded the whole direct contracting, if you will, to essentially essentially give them credit to insurance companies that specialize in helping in health equity. And Clover Health, that, you know, that's their main mission, right? That's their main population. And that's only set to benefit them. So the reason why I put the without the direct is not that direct is going away, is that analysts, even then when the price hits $48 from our bullish price projection, if you may, analysts are going to start saying, oh no, the stock might be worth $20. And the only reason why they say that is because, well, very simple. They wanted to press down the stock price even more. They still have investments in Humana. There's a lot of factors, but I wanted to put that in there just so people can see, you know, oh, that's where we're getting the numbers from. And the numbers that I got to that price target was 37%, which was filed on their, I believe, annual 10K. No, not annual 10K. It was their report filings for the share dilution. That was their growth rate before direct contracting, hence why I used the number. So I hope that makes sense. But just so we can see a holistic analysis. And in both perspectives, you can see Clover Health is undervalued. Very clear. Perfect. So that's about it, guys. It is an honor and privilege. Thank you so much for joining, and I'll see you guys on the next one. So peace out.